Hi everyone, this is John Sneisen from the Economic Truth Report here, and I had a little bit of a break. It's been about 5 months now, but I thought it was worth, to jump into it again. I've been very busy with all the business that I'm doing, so you gotta excuse me. But I have a real treat for everyone today. This is the Economic Truth Report number 36, and I brought in a JPMorgan insider. His name is Robert Mario Mennella. He's a seasoned Wall Street professional and technical analyst with over 30 years of Wall Street experience. Robert holds former Series 7, 63, 24, and 66 licenses since 1989 and has been life, health, and accident insurance licensed as well since 2005. It's been around for a while. He served as the senior financial advisor at JPMorgan Securities, where he created the widely distributed Tech Check newsletter. At JP Morgan Turner, he held roles as senior portfolio manager and equity strategist developing the Estimate Tracker publication. Robert is a technical analysis expert with specialization in Japanese candlestick methods. As the founder of Equity Research, his mission is to help others profit from their expertise. He has built a strong presence on LinkedIn, sharing his market insights over the past 7 years, and authored the book that I read parts of. I haven't read the whole book, so you got to excuse me, but I think you're going to bring us in on parts of it. It's called Heavily Redacted, a JP Morgan Whistleblower's Journey. So welcome to the show, Robert. Great to
Thank
have you
you.
on.
Thank you for having me.
Yeah. So Robert, I think we're gonna just what I want to do first is kind of like get people introduced to your story. So how about you just bring us into, how you got involved in the financial markets, how you start up as a financial advisor, and kind of bring us to the journey, and then go into JP Morgan after a little while here. But let's start at
Sure.
the beginning. What brought you
Yeah.
into becoming a financial advisor in the first place?
Yeah, it wasn't something that I really had planned, coming out of high school and college. I kind of got into the industry by accident. I was working down in Wall Street. I was actually I had a trucking business, and I was moving some mail for American Express and Shearson Lehman. And after work, I would go to the New York Health and Racquet Club and downtown, and I would work out. And I bumped into a guy who was a stockbroker, and he asked me what I did for a living. And we started talking. And after a while, he said, "Well, why don't you try becoming a cold caller?" And so I didn't know what that was. So he said, "Baby, basically, you just call people cold over the phone, and you try to introduce them to our firm. We send them out a brochure, and then we call back with initial public offerings." I was working in investment banking at the time. So that's how I got into it initially. And then, so this was 1989. So I started out, red hot, and then the Gulf War happened, and the markets weren't moving at all, and nobody was doing anything, and it was a real low point where I thought of maybe going back to my messenger business, and it was a really trying time. But the market started coming back again, and I really knew that I could help people because I had a good understanding of what was going on in the markets. I started reading all of the papers, the Journal, Investors Business Daily, and I got interested in a book called How to Make Money in Stocks by William O'Neill, where he uses his can slim method, which is very well known on the fundamental side. But on the technical side, he was using candlestick charts. And that really appealed to me. So I started learning all I could about candlesticks because me and a couple other brokers started our own firm, and we needed ways to generate ideas to present to the clients. So we came up with this was 1993. I came up with like a technical and fundamental presentation. So at the time, you were either a technical guy or you were a fundamental guy, but the two shall never meet, and that's how it was back then. You were either technicals, you don't care about the fundamentals, or you're fundamentals, you don't care about the technicals. And I thought, why don't we just bring the two together because they're going to have some correlation along the way. And that was the presentation that we made with correlation between the two. And nobody was doing this. It was very unique. And we had a good business for a little while. The problem was I had too many partners. I had three other partners, and I basically ran the entire operation. And the rest of them, they did some work, but the majority of the work was done by me. And they were just profiting off the fact that they were partners and they really weren't working or generating accounts or commissions. So I decided I would put an end to that because I had a family to support and I didn't want to support three other people. And so we broke up the company. I worked independent for a while, and then I learned and then I started actually at a brokerage firm close to my home in Brooklyn, JP Turner. Sounds like JP Morgan, but it's JP Turner. And they're a regional firm. They had probably 700 or 800 brokers. And so I took my experience from my technical analysis, fundamental analysis, and I designed a one-page fax that would go out to all of the offices. They would call them blast faxes. So we would blast fax all the offices on the ideas that I was looking at, and I basically had metrics, 5 or 6 metrics, fundamental and technical, that would fit into the profile of what I would consider something good to buy. And we had some really big winners at the time. This was 2001, so right after the dot-com crash. Chinese internet stocks became very popular because the Chinese had just opened up the internet to their people. So I started buying 3 or 4 of those stocks, and they were just huge winners. And I had some really good clients, and I decided I didn't want to work for a small brokerage firm anymore because I saw how much money guys were making at the bigger banks, and that appealed to me because I don't have to solicit people over the phone for 10 grand to 50 grand or 100 grand, because the money's already there at the bank. So if somebody's got $1 million in their bank account, it's an easy transition. It's a warm call. It's a face-to-face meeting. So that kind of appealed to me. And yeah, I joined in 2005, actually the same time Jamie Dimon started.
Yeah, that's
So
correct. Yeah.
yeah, I worked on Park Avenue, downtown near Gramercy Park, and I really had to get acclimate myself to the banking structure. So essentially, what they do is they allow you to call the deposit list. So you had a list of all the customers and the deposits, and you'd start at the top and you work your way down, and you call them to have them come in for a review and see if there was any opportunity for them to invest some of their money into something that would do better than a savings account, because JP Morgan never really paid any kind of decent interest on a savings account. And a big list was also the CD maturity list, because CDs were paying 5, 6, 7%, 2002, three, and then those CDs started maturing, and the new CDs were paying next to nothing. So that was like a really good way to get people to keep their money working for them, not in another CD, but something similar. So JP Morgan wanted some people to, I'm not saying they said do this, but they encouraged you to take people who had money in CDs and invest that money in the market. And to me, it sounded like kind of a stretch, because CD money is kind of like safe money. You don't want to lose anything. You got a guaranteed rate of interest, and to move that money from that type of product to a managed account for JP Morgan, which made more money for them and for the advisors. And I just felt that was kind of a stretch. because customers could come back and they say, wait a minute, I didn't want to be in this risky thing. I was in a CD. And so I would try to find products that could help them make a little bit more money, but not take on so much more risk. So we had things like fixed annuities. Fixed annuity is basically an insurance product with a guaranteed rate of interest, grows tax deferred. You've got to hold it for a number of years, and you get your money back at maturity. So the annuities were still paying 5, 6, 7%, and so I switched around $50 million from CDs into annuities, and I put a spotlight on myself almost instantaneously because nobody else was really doing this. And I was in Manhattan, and I caught the eye of the upper level management. Not Jamie Dimon, but a
Yeah.
couple a rung below him or two. And yeah, so then I was a top producer in the district at the time, and then they just started when I first got hired, they were looking for experienced people. They weren't looking for kids out of college. But then after I started doing well and I was there 3 or 4 years, they started opening up a lot more branches. So they needed more financial advisors. So they basically were just like turning the bankers into financial advisors, just like sending them out to get their licenses. And some of them did really well. But they didn't have experience in the financial world. They only had experience in the
Yeah.
banking world. So kind of the quality of the advice, in my opinion, kind of tapered off after a while because they no longer had the qualification that you had to be in the business for 5 years and so forth. So at that time, um, I was doing my business, I was growing my business, I was raising money. I did some managed accounts, but the reason I wasn't too crazy about the managed accounts is because number one, was their entire focus, and the whole thing was around how much money are the advisors making, not how much money is the client making,
Yeah.
or are we doing the right thing for the client, or are we are these things suitable for all clients, that sort of thing. The meetings were just about who's making the most this month, and that was really what it was all about. And so advisors were kind of like encouraged to find the products that paid the most commissions
Yeah, and they're
instead of
basically salespeople which is actually
yeah,
a lot of financial advisors today. There's very few that are actually. I have a buddy of mine. He's like you. He has one of the different series that you have, and he actually focuses. But it's very hard to find those people that actually like focus on, the customer and not on their own profit.
yeah. Yeah, that's a big problem, and that a lot of advisors try to switch to flat rates where they would charge less, like for a specific meeting. If you met with me, I charge you $250 for the advice, and I wouldn't be charging you a perpetual fee on top of your money. And that was the rise of the fintech era, which started maybe 7 or 8 years ago. And a lot of money was pumped into fintech. It was supposed to be, the thing to do because you don't need an advisor. You just punch in some metrics into a computer software program, and it told you what to do. But I think the problem that fintech had was that it didn't take into account that most people are lazy when it comes to their money, especially people that have a lot of money. They're really not so concerned about losing a lot of money, especially the ultra wealthy, and so they just go along with whatever it is you're pushing. It doesn't matter what the fees are. It doesn't matter if there's any performance. They just like the fact of saying they have a JPMorgan broker. Because it sounds good at the cocktail parties. So, um, yeah, so I think that was a big disconnect that happened with the fintech is that they thought that everybody was going to start doing it on their own, and what they discounted was the relationship aspect of financial advice. And some people are willing to pay high fees for advice, and a lot of advisors provide the advice that the customers are willing to pay for, and that's all good. um, but if there's no performance at the end of the day, I mean, what are customers really paying for? you
Oh,
know
100%. Yeah.
yeah. The thing I found interesting was that with the managed accounts, the performances were not good at all. I mean, they lagged the markets by a lot, because they were like overly diversified. Like 10, 7 or 8 different asset classes, subclasses in those. And they never really made any money. And I had clients complain when the market started going up a lot, back in it was '09 and 10, it started taking off. And customers come in and will say, "Hey, the market's up again. How's my account doing?" And I have to tell them, "Well, you're diversified, so you're not going to make as much, but you're not taking on as much risk." And people don't want to hear that. They just want to hear that I open up the paper, the market's going up, my account's not going up. Why? What are you doing wrong?
Yeah.
You know, so I became kind of, I don't know, not frustrated about it, but I started tailoring what clients actually wanted to the products that I offered to them. So instead of doing an asset allocation, if a customer just wanted to earn more money, not taking any more risk, I put them in a bond fund, or if a customer wanted tax-free income, municipal bond fund, if a customer wanted to do 100% equities, yeah, growth portfolio, something like that. So I really tried to tailor the advice to the customers, but
Yeah,
there was not a lot.
which is what a financial
What are you
advisor
supposed to
should
do?
do. Yeah.
Yeah, because I came from the world of stock brokering, and I just was slinging stocks over the phone. I had a great time doing it. It was a lot of fun. I made a lot of money for a lot of people, but it's not for everybody, and it's not for most banking clients. And so I try to just, I had my little corner office. Nobody bothered me, and I was still, the third or fourth top producer in the district. They had a lot more people, and most of the advisors were just pushing the fee-based accounts and making good money. And actually, one of my bankers, who I trained, became a financial advisor, and he's like one of the top producers in the whole firm right now. He's got $1 billion under management, and yeah, he was my banker, and he's a real good guy. But he just did what they told you to do. If you just do what they tell you to do, you're going to make a lot of money. It's
Hmm.
that's just
Yeah.
But you've got to. I mean, if you've got to sell your soul to do it,
Oh, of course. Yeah.
some people
Yeah.
don't care.
No,
You know.
that's for
But
sure.
when I look at like an elderly person across the table from me, I'm looking at my mom. I'm looking at my dad. I'm looking at somebody who really wants to trust me to do the right thing.
Yeah,
And I
which
think
is what they're coming to an advisor for in the
yeah,
first place.
exactly.
Yeah.
And and then the advisors, they know that the customer is trusting them, so they can say basically whatever they want, and the customer's going to believe them. You know, and so I was one of those advisors that took the customer's trust very seriously. And asked tons of questions before I even recommended anything. But most advisors would just tell them, well, you got to be in a managed account, answer a couple of questions, boom, 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 bang it out. It's like a conveyor belt,
Yeah.
move on to the next customer. Um, but we had a lot of products at the time that I could offer to customers, but after a while, they started phasing out all of the outside product vendors. Um, so they got rid of a lot of mutual fund families. They got rid of life insurance. I was life insurance licensed, and if you're doing a financial plan for somebody, life insurance is a really big part of it. And they just eliminated life insurance altogether. We were doing whole life.
Yeah,
You know,
which is, by the way, a really, really good thing to do.
yeah,
I have myself, so
yeah, yeah,
I'm
me
very
too.
biased. Yeah.
So, so if you're trying to get somebody, with a high net worth, and you're trying to capture all of their assets, you got to sit down with their attorney, you got to sit down with their accountant, and you got to have a meeting and plan. And JPMorgan did it half-ass. Um, they didn't sit down with anybody. They said that they didn't offer tax advice. So that's why all of their products never included, and the financial plan did not include an allowance for taxes when you made your withdrawals. So if you're
Yeah.
looking at a financial plan and they're saying, how much money, you're asking the customer, well, how much money are you going to need in retirement? They say, well, I'm going to need $2,000 a month. Okay. Well, this product is gonna give you $2,000 a month.
Yeah.
Okay. It's not guaranteed, but it'll give you two. What they don't tell you is that that's gross. They
Yeah,
didn't.
that's and a lot of people income tax. So it's
Right.
yeah,
So I need $2,000 a month. That doesn't mean I need 2,000 a month that I pay tax on, and I need 1,200 a month. No, I
yeah,
need the 2,000. So their financial plan was flawed in that it didn't include taxes for the withdrawals, and it didn't include any fees on the products that you would have put them into.
yeah.
So that
Yeah,
was
which is
another.
interesting. I'm in Canada, so like I've seen this first place. Actually,
I
one
know.
of my I have an advisor guy that me and him we shoot a lot of ideas around, and that's his biggest thing is exactly what you're talking about. Is most people come to him and oh, I'm about to retire, but they never told me about my 35% income tax hit here in Canada. And
That's right.
so yeah, so it's kind of devastating to a lot of people. They never were advised for, customers for 30, 40 years and
Yep.
never, knew that there were actually a big tax burden on, their investments. That's pretty serious stuff that you should probably told someone about. But
Yeah.
yeah, so, sorry to go on there, but keep
No,
on going.
no, that's fine. Yeah, actually, I voiced my opinion at a big meeting when they did an update to the financial plan. And if you know me, and everybody knew me at JP Morgan, I always raised my hand and I asked a lot of questions. And I wasn't drinking the Kool-Aid. I needed to know what the details were for every single product you wanted me to present to customers. Because if I don't understand it, I'm not going to be able to explain it to the customer, and they're certainly not going to understand it. So I raised my hand. I said, "Well, this new financial plan is great, but how come it doesn't include an allowance for taxes on withdrawals?" And I was in Manhattan. I was at headquarters. We were in a room with about 400 of the top advisors of the firm, top management. The only person that wasn't there was Jamie Dimon, and I believe it was Marianne Lake. Uh, Marianne Lake, she's like maybe the successor for Diamond, and she was there. And I said, well, why don't we have an allocation for an allowance for taxes on the withdrawals and the financial plans? And she said, well, we don't offer tax advice. I said, okay, we don't offer tax advice. I understand that, but this is really not tax advice. This is a tax consequence
Yeah,
of
yeah,
what of
exactly.
what and so we're not telling people about the tax consequence of the money that they're depending on, and trusting us that this is going to happen. And then when they start taking withdrawals, they realize that it doesn't. I mean, are we doing the right thing here? So man, you could hear a pin drop. And she goes, and I looked all around, and all eyes were staring at me. And she said, and she looked at me very sternly, and she said, "Like I said, we don't offer tax advice. In other words, that's it." And then she's
That
like,
sounds,
"Okay,
what's funny? That sounds exactly how mainstream media or politicians like to talk to people. So yeah,
yeah, yeah,
that's kind of
exactly."
the culture out. Yeah.
Yeah, she didn't want to hear any more about it.
Mhm.
And then I think from that meeting, I may have made some of the managers pissed off because I was asking questions that should have been asked, and I wasn't just going along with the program. The yes men in the room. I was never a person to do that. And if you read my book, the last two words are question everything, and I
Yeah.
think that basically sums up. That sums up, how I've
Yeah,
been.
people like us don't fit in different cults.
Yeah, yeah, it was really a cult.
Yeah, yeah, exactly. Well, that's
Yeah.
very interesting. So what happened from then? Like you basically asked like kind of I guess it was the last drop for them. That like this
Mhm.
guy's a real problem now. We gotta have to do something about Robert.
Yeah.
And so what happened after that meeting? Like, what did it start right away, or like how
No.
did it kind of progress from there?
Well, without giving away the whole book,
Yeah, yeah, yeah.
I don't want to spoil it if
No,
you're
for
if
sure.
you're
Yeah,
still looking at it. But what happened was I had been the victim of a road rage, and this was on a Saturday. I was taking my daughter to work, and somebody I got on the highway, and somebody started cutting me off, and then brake checking me, and then really driving crazy. And there was a woman with a child in her car. and I couldn't believe what was happening. So I wanted to just get away from her. I tried to veer away from her as soon as I could. And I drove into the supermarket where my daughter worked, and the person came up behind me. So I didn't know what was going to happen, and I pulled up next to her. I saw it was a woman with her kid. She started yelling and screaming at me, and I was like, "Wow, what's your problem? Are you okay?" And she said, "You cut me off," and da 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 da. So, without going into the details, I said, "Okay, I'm not dealing with this woman anymore." So I just drove away. So I drove away, and I was going to play golf after I dropped my daughter off. I was playing some golf. I got a call from the local precinct. They wanted me to come down and talk about what had just happened. Okay. So I said, "Well, I'm golfing. Can I do it afterwards?" I said, "No, you got to come in right away." All right, whatever. So it was, I didn't have to go, but I wanted to clear it up. So I went to the precinct and I was sitting down in a room. I told the guy what happened, and he goes, "We're arresting you." So arresting me for what? And he said, "We're arresting you for impersonating a police officer." I said, "I never impersonated a police officer." Yeah. So he goes, you showed her a badge. I have a family badge for my dad. It's like something that they give to relatives. So whenever you're in a sticky situation, you can pull out the badge and scare somebody off and they won't bother you. Right. So I just showed her the badge. I said, "Come on, leave me alone." And so I said, "Well, because you showed that badge, that's essentially you're impersonating a police officer." So they arrested me and they charged me with that. And that was on a Monday. And then 3 days later, I called the prosecutor's office and they said they were dropping the charges. They said, we know you didn't impersonate a police officer because in order to impersonate a police officer, it's not just showing a badge. You have to show a
Yeah.
badge and you have to give somebody an instruction.
Yeah. Yeah.
So I'm a police officer, do this, or, don't
Yeah.
do this because I'm telling you to do that. And so they dropped the charges, and the charges were petty disorderly, like the lowest charge you could possibly get. So I didn't think anything of it, and nothing happened. The charges were dropped, and I went on with my life. So then, when I started complaining about all of these things, 12 months later, they said, "Robert, you've got to take your fingerprints again because we have to do a background search on you." And I said, "Well, I've never had that done before." I said, "When you started at a brokerage firm, they fingerprint you, they do a background check, and you're good to go. There's no subsequent background checks while you're working there. That's never happened before." So what they did was they lumped me in with a group of unlicensed employees who had to become licensed because they had access to customer data. And it was like, I don't know if you remember, but the JPMorgan was fined 20 or $30 million because they had 8,000 employees that should have been licensed that weren't. And they lumped me in with that group. And so I said, "Well, I'm already licensed." I said, "Why are you doing a background check?" So they probably already knew that I
Yeah.
had been arrested and it was dismissed because you can just look that up. You don't have to do any background checks
Well,
for that.
they've probably been digging on you,
Yeah. Oh,
most
yeah.
likely.
Oh, for sure. 100%. They were looking all along because they
Yeah.
wanted me.
Yeah.
They wanted my head in a platter. And so they said, "Well, why didn't you?" So they found out about the arrest. They said, "Why didn't you tell us about this arrest?" And I said, "Because and I was a principal. I was a Series 24, which is also a compliance officer. So I know what you're supposed to disclose and what you don't have to disclose. So arrests that don't result in a charge don't have to be disclosed. FINRA doesn't need to know about that. And the reason is because 50% of the people that are arrested in this country are not never charged with anything. So if every single person that was arrested had an arrest record, and that was available to employees, even though charges were dismissed, that'd be a black eye.
Yeah.
And the interesting thing is, at the time this happened, New York City had just passed a law um, saying that employers cannot ask about arrests.
Oh,
And they violated my civil rights,
yeah.
number one.
Yeah.
Number two, they can't even ask about convictions if it doesn't have to do with your specific industry. And the reason is because they don't want people to be discriminated against for having minor infractions or arrests that don't result in charges. If you think about all the people that are arrested in at political rallies,
Oh
they
no,
sit there.
yeah, no, there's a lot of that. That's
I
for
mean,
sure.
thousands of people. So
Hmm.
you can't really hold that against a person for the rest of their lives and make their lives miserable
Yeah.
because of their political beliefs. So anyway, they use that as the excuse to terminate me. And I said, and I told them, the rest is not reportable. They said, yeah, but you got to tell us about all arrests. I said, no, I don't, because that violates my civil rights. Here's the law, okay? And and so they didn't care. They terminated me anyway. And 3 days before I was terminated, my attorney and I had filed the whistleblower lawsuit with the SEC. So the timing was very coincidental. And then after I was terminated, we told the SEC that I probably would be fired for my whistleblowing. And
Yeah.
then after we reported, I was fired.
Yeah.
So then we followed up with a retaliation lawsuit, and that went through OSHA. And that was another part of my journey. That was a kind of a saga, because as you know, OSHA historically is a government agency that looks for things like slips and falls and bad working conditions. And for some reason, when they passed Dodd-Frank, OSHA was given the task of enforcing Dodd-Frank and SOX, even though OSHA had no experience at all.
Interesting.
Yeah, so that
Yeah.
might have been by design. I
Oh,
believe it was.
probably. Yeah.
Yeah, because only about 15% of the cases that are brought to OSHA have merit, and anybody, wins their cases.
Yeah.
So OSHA is very heavily industry influenced, and JP Morgan is no different. But initially, my investigator was very good, and she was very serious about it. And she didn't, I had the feeling from her that she was really trying to get to the bottom of this because it was really very simple. You know,
Yeah.
her supervisor seemed like a JP Morgan person because he was asking all the questions that like a JP Morgan guy would ask. So I knew something was kind of fishy right off the bat. And then, so the investigation went on for a long time with the back and forths. And then, for some reason, my case was being handled in Teaneck, New Jersey. And then, for some reason, I get an email from an OSHA supervisor in Buffalo, New York, and he says your case has been closed. Your supervisor's been put on leave. She won't be back for 3 weeks. Yeah,
Interesting.
uh, and I was flat. I was like, who are you? And you're not her supervisor. And why are you sending me this email? And didn't correspond with anything. And so I did a little bit of digging, and I found out that J.P. Morgan had donated $500,000 to Buffalo, New York, to support jobs 3 weeks before he closed my case.
Wow.
Yeah,
That's just an interesting coincidence, isn't it?
too interesting. So so
Wow.
I wasn't able to get any information to back it up, but I called the inspector general for OSHA, and I told him about this whole thing, and they came to the inspectors came to my house. We sat down for 4 or 5 hours. I laid out everything. They took a bunch of documents. They did their investigation, and they found out that the guy from Buffalo said that he didn't know anything about the $500,000 donation 3 weeks before JP Morgan, before he closed my case, which is kind of impossible because Buffalo it's not a very big city. And anything of that magnitude, like the presentation it was a whole big presentation where they had the giant check, it was on TV and the whole thing. So
Oh
there's
yeah.
no
Yeah.
way he didn't know about it. No way he didn't know about it. And so yeah, he said, well, the first I knew about it is when Mennella told me about it, and I was just incredulous. So the thing that really ended my case with OSHA was the fact that OSHA does not have any subpoena power. So they can't subpoena any documents. So you ask for documents from the other side. OSHA asks for documents, the inspector asks for documents. They don't have to turn them over. They can say, no, we don't want to. And that was key to my case because the documents they refused to turn over proved that what I was saying in my case was that their annual compliance certification had a question in there that asks about all arrests at a time when it was illegal to ask about that. So they said, "Well, we've always had that in there, that question, and we didn't know that this was a new law. So you answered no, so that's why we fired you." So I asked, show me the previous compliance certifications to show that this question was the same. Okay. And instead of doing that, they said no. They wrote some 50-page letter to the Buffalo supervisor. He closed my case. When the inspector general subpoenaed the documents from JP Morgan, then they had to turn them over. It proved that the previous compliance certifications did not include an arrest question. So the inspector general investigators went back to the OSHA investigator in Buffalo, and they said, "Well, this is part of the documents that weren't disclosed from JP Morgan. What would you have done had they disclosed this?" And he said, "Oh, the case would have continued. We would have kept going with the investigation." So JP Morgan kind of used a legal wrangling to kind of dismiss me by not turning over documents during an investigation because they knew that OSHA didn't have subpoena power. But my case was already closed after the general inspector general found out, that what I was saying was right. So my case was already closed. So I didn't have any recourse from there. You know, I could have took it to federal court, but at that point I was already like 3 or 4 years into the whole process, and I really just wanted to move on with my life at that point.
Okay.
I knew nothing was really going to come of this, and then I also found out that all right, so my filed my whistleblower claim in 2016. Okay, Trump won in 2016,
Yeah.
and he put in all of his people into government. And Jay Clayton was head of the SEC at the time, and Jay Clayton worked with Jamie Dimon in the past on some of the bank mergers with WAMU and Bank One, so they were already buddies. So uh, the whistleblower claim that I filed was substantial, and the SEC had already written us a letter saying that this is a substantive case and we're taking this very seriously. We had a number of face-to-face interviews
Yeah.
with myself and then follow up with my attorney. And so nothing ever came of it. We didn't know why. And then in 2020, just before Jay Clayton left, before his term ended, he left. Um, the OCC fined JP Morgan $250 million for the things that I was complaining about. The lack of disclosure and transparency.
Yeah.
And and then I said, wait a minute. I said, these are all the things that I was complaining about. So it turned out, I don't know 100% for sure, that my SEC claim went from the SEC to the OCC, right? Problem with the OCC is they don't pay any whistleblower awards. So the SEC basically just screwed me out of my award by giving the case to the SEC, and the SEC fined J.P. Morgan 250 million. My attorney and I had estimated that at the time they were not disclosing about $90 million a year in fees. So 10 years in, that would have been like a $900 million fine. Would have been a lot more substantial.
Yeah.
So I believe it reached the level of the SEC chairman. My case was handed over to the OCC. The OCC fined JP Morgan $250 million, and I got nothing.
Yeah, it seems like that's how it works with a lot of the big banks. I've been aware of this for many years, and they have their own litigation funds, for this kind
Yeah,
of shenanigans, when they
that's
are
right.
committing criminal activities. They just, make sure that they have a little, it's almost like a payoff in my view, to the regulator, just to be like, hey, we made all our billions. Here's a little bit for, keeping us out of trouble.
Yeah, no,
Yeah,
that's exactly what it is.
yeah,
I mean, if you look at the all the crimes JP Morgan has committed since
Hmm.
JP Morgan started, you know, $39 billion in fines. You know, you're talking about $13 billion fine alone for the mortgage crisis,
Yep. Yeah.
$900 million fine for spoofing the metals market.
Yeah.
You
I
know,
remember that one very well. Yeah. Them
yeah,
and a
they
whole
just
bunch of other banks,
yeah, they don't
just
care. It's just basically a game. You know,
yeah,
like
yeah,
we're just do what we can. We'll make $1 billion. You know, we'll pay a couple $100 million in a fine,
yeah.
and at the end of the day, it's a good business for them. You
Oh,
know,
of
net
course.
it's
Yeah. They
profit,
still they still made a bunch of money.
right? And nobody's
So
going to jail. You
no.
know,
Yeah.
there's no incentive. It's kind of like an incentive
Yeah.
to give a small fine. You know,
Yeah, it's almost like I guess, well, it's like this in a lot of other industries today too, and it's not just the United States, it's like everywhere in the world.
yeah,
Like it seems like it's turned to like semi-corporate fascism where they have, well, it's regulatory capture. Like they
yeah,
capture the regulatory bodies. They had,
right,
as you said, you just had Jamie Dimon's buddy in there in from 2016 and to
hmm
2020, and when you have that, they're gonna do favorable things. They're not gonna do like blatant, like so it's obvious to the whole population. I think it
yeah,
is now though. I think it's
yeah,
become to a point where people are sick and tired of this, blatant control over their lives, and then they constantly see these cases, and banking sector is one thing, but you have it in every other sector.
yeah,
Like in the FDA, the uh what do you call anyway, like the medical industry and so on. Like all
right,
these industries are regulatory capture, so there's no way of anybody like being able to sue. Like the vaccine manufacturers was a good example, where they created their own little court. You go to the court and then the taxpayer bails you out and not you know the
right,
pharmaceutical company. So it's very obvious now that that has happened. And I think probably what, like, and personally I'm a anarcho-capitalist or like libertarian, if you know those terms.
hmm
And
yeah,
so with that, like I even believe that those regulatory agencies shouldn't even be there. It
right,
should be up to the market to regulate, because
right,
if the market saw the corrupt behavior from JP Morgan and there was no regulatory agency to help them get around, maybe people would just leave JP Morgan Chase when they're doing a criminal activity and stealing money from their customers.
yeah, yeah. It's definitely a cost of business
Hmm.
thing. Um, and the interesting thing, if you ever look into the documents that corporations have to file every year, the disclosure documents, um, they say really in the back of their document that we realize that we're such a big bank that there's going to be some illegal activity that goes on, and as such, we're putting away
The
$10
litigation for that.
billion to
Yeah.
pay. So they're already setting money aside
Yeah.
for things that they know that they're probably going to do wrong.
Yeah.
You know, and that's not really how corporations have to be run. And I'm a capitalist as well, and I have very big aspirations for the people of the United States to pull themselves up by their bootstraps. But when the deck is stacked against them,
Yeah.
and it's been stacked more and more every single year, it becomes an unfair playing ground. And I
100%.
think
Yeah.
that started with Reaganomics. You know, when he started giving tax breaks to corporations on the anticipation that they would use those tax breaks to expand their businesses and hire more people, hence the trickle down
Yeah.
adage. Okay, but it never happened. The corporations they didn't use that money to for capex. They didn't use that money to hire more people. They used that money to buy back stock to enrich the C-suite,
Yeah. The
and that
financialization started at that point where you just,
right,
why create planes that could fly when you could financialize like Boeing did, right? And look at where that took
right.
them.
Yeah, well, I mean,
Yeah.
why should I hire, why should I use this extra savings from the tax breaks to, hire 100 more people? I could buy back, $10 million of stock, and my stockholders would be happy. And and CEOs at the time, shareholder value was job none, job one.
Well, that's the structure of the corporation, in my view. It's,
Yeah,
like just adhere to the shareholders, and there's nothing else. There's nothing else. Like if that means to just cut a whole bunch of people or do whatever, or
right.
financialize yourself to the point where you're not even doing R&D anymore,
Yeah,
and you're just like basically, betting on stocks. That is not a healthy structure. So I think maybe
right,
like for the future in the United States, maybe even the structure of the corporation itself needs to be looked at and have, more of a what do you call it, a individual. Uh,
performance based.
yeah, and the actual individuals in that corporation that do the criminal activities is not hidden by the corporation, because that's what's happening right now. Is
Right,
that corporation is immune? Well, you could sue the corporation potentially,
right.
but you can't come after the people that did that action in the corporation as of current.
Yeah, yeah,
Yeah,
exactly.
yeah,
They're shielded.
yeah.
So, but other countries are sending people to jail. I mean, if you look at what's happening in, I think South Korea, there's some big real estate woman, and they just threw her right in jail. They didn't care. So I think what's happened with the United States is, after all this started happening, it looked really good for if you had a little pension, or you had a little 401k, or you had a little IRA, and you see it going up, a little bit every year. It's a good thing, right? It's good for my retirement and so forth. But at the end of the day, you have the other end of the spectrum where, okay, I have this little retirement thing I can access in 30 years from now, but hell, I can't find a job, or I can find a job, but I can't find a job that pays a living wage,
Yeah.
or I can't find somewhere to live because housing has become unaffordable. So the middle class has really been decimated, and the middle
Mhm.
class
Very
are
much.
the ones who, we built this country, on our backs with blood, sweat, and tears. And for corporations and CEOs to come in and just disrespect that to the tune where all they care about is shareholders, and no regard to the communities that they serve, or the people that they're trying to help, stakeholders.
Yeah.
Stakeholders are not shareholders. Stakeholders are not necessarily shareholders, but they might be residents of the area in which companies are operating, right? So they're directly affected by, you take like a chemical company, the people are
Yeah.
going to be affected by the chemicals that spew into the air, you know. Um, so I think there has to be more accountability to corporations, to start looking longer term.
Yeah.
Um,
Yeah, I think, sorry to interrupt you, but I think the
yeah,
actual regulations are kind of impeding competition in a view as well, because it's regulatory
yeah,
capture. So it's very, very hard to actually come in and come in with a greater product, with a better way of doing things, to, actually compete. And of course, these behemoths of corporations that we have right now, like Canada is even worse, because everything is like a duopoly, or
right.
or like maybe we have three, choices if we're very lucky, and so it's like completely
Hmm.
out of the picture. And of course they've taken over all the regulatory agencies, so they
Right.
just basically write regulation, to then
Hmm.
impede and make it really hard for anybody to come in and take them on and actually
Right.
do a good job at it, right? So it's uh
Yeah.
they really create monopolism in my view. And so
Right.
I don't know, like I feel like having that regulation in the first place is kind of hard. I think it's a lot easier if you let the market, meaning the people themselves, actually decide if what this big business is doing is good or not. And I think it'd be a lot better up to that, because when you put in a government entity, it really is so much easier for a corporation that, or a business that becomes so big, to then be easily, be like, hey buddy, like,
Mhm.
or like, oh no, only we know how to regulate ourselves. So
Right.
that's a good one, right? So
Right.
I think it's over time, it might be a great idea to begin with, it works initially, but then it's just got taken over, like government itself. Government was very small to begin with, and then it just becomes a behemoth,
Right.
in itself. So I think we probably need to seriously rethink, where we're going. And like here in Canada too, we can probably go on for a decade or two more, but then we're gonna end up like Argentina. I don't know if you've seen what
Mhm.
just happened in Argentina, where people got sick of, and it wasn't the old people. It was actually the young people was so sick of what was going on in Argentina that they actually got an anarcho like I'm an anarcho-capitalist. They actually got an anarcho-capitalist to run the government, which is it's a total oxymoron because we don't
Right.
really like government.
Yeah.
But that's how far it had to go in socialism. They used to be great countries, right? They used to be high,
Right.
high up on the scale. They very prosperous countries, but then
Absolutely.
taxes and big government destroyed them.
Yeah. Yeah. I think the problem with regulations that you put regulations into place, right? But the regulations are based upon what corporations have done in the past and not necessarily what they might do in the future. And that's why you always see these big fines because corporations are always figuring out new ways to get around the regulations,
Oh, for sure, yeah.
because there is no real like, okay, I'm just gonna do the right thing. You know, here's two choices. Let me do the right thing, let me do the wrong thing. If I do the right thing, I don't make as much money. If I do the wrong thing, I make a ton of money and I get away with it.
Yeah, get a
So
slap on your wrist, and then you could just, maybe they put in regulation, and then you
right.
could just figure out a new thing to do bad.
Yeah, that's exactly what it is. Yeah, the governments are always behind,
Of course.
government industry because, I mean, the government, they don't have the money to hire the brightest, and the smartest people. So the brightest and the smartest people are going to private industry, and they're the ones that are figuring out how do I get around this.
Yeah.
That's exactly what they're doing. So yeah, I think there is. I think you need some regulation, but I don't think. I think a lot of the regulations are antiquated and should probably be taken off the books if it's already been established that there's an easy way to get around it. Right?
Oh,
Why
yeah,
even
yeah,
have the books
yeah.
anymore?
Hmm.
Doesn't make sense.
Oh, for sure.
So
So
yeah.
yeah, so let's talk about the current market then,
Okay.
because there's a lot of things happening.
Yeah.
What do you see? Because that's kind of your bread and butter now is kind of
Right.
analyzing what's happening and so on. And maybe you could put on your analyst hat and
Sure.
tell like where do you see like different asset classes right now? The big ones, of course, is precious metals. We got stocks, bonds.
Mhm.
And so if you could give us a little bit of a rundown of where you see things right now, because I think there's a lot of risk out there right now, and
Huh.
I don't, you
Yeah.
probably agree with me. And so if you could
100%.
give me some of your insights that you have, because you've been in the financial markets for a very long time, and
Yeah.
so I'd love to get your input on what you think
Sure.
like currently is happening.
Yeah, well, if you remember, I said I combined technical and fundamental analysis. Well, over the last 3 or 4 years, fundamental analysis has really not mattered at
No,
all.
no,
As
yeah,
far as like valuations go, we're way beyond any traditional valuation. I think the PE is maybe forward PE is probably 25 to 30% higher than it should be, and I think, I know a lot of this was caused by QE and capital infusion, and you print in a lot of money. Where's that money going to go? It's going to go into the stock market. So the stock market is inherently inflated more now than it has ever been. So I don't think it really matters if you're a good company or a bad company. Your stock is going to go up with the rest of the market. And over the course of maybe the last couple of weeks, we've been seeing a little bit of a disconnect um, between tech and industrials. It's been kind of a flip flop, over the years. It's like the money's rotating in and out of both of them, and there's no real rhyme or reason to the daily fluctuations in the market. I think for the last 2 weeks, it's just been flat. We haven't
yeah,
really gone anywhere, just like a little, kind of like one of these. And and that means that the market is not really ready to go higher. It's not really ready to go lower, but something's going to happen because the volume has also been a light too. So from a technical point of view, it's like just before a tsunami, the water all recedes, and there's nothing there, and then you get a big wave. So I think that's kind of where we are right now. The water is kind of pulling back um, before we need a correction because
Yeah.
corrections are good,
So
for the white.
everybody's very excited picking the shiny stocks right now
Right.
at the shoreline and the
Yeah,
ones.
I mean everybody's
Yeah.
buying three stocks. They're
Yeah.
buying Nvidia, they're buying Apple, and they're buying Microsoft
Yeah.
or Meta or the Fangs. So, and I think a lot of this also has to do with the fact that people make contributions into their retirement accounts, on a monthly basis, and that money's got to go somewhere. And where does it go? It goes to the mutual funds
Yeah,
that
an
they've
ETF,
picked out.
EQQ or something. Yeah.
Yeah,
Like, yeah,
and then
exactly.
those mutual funds, they just take your money and they put it into, the big five stocks, and everything keeps going up and up and up.
Yeah.
So it's really it hasn't been fueled by any sort of valuation or fundamental analysis. And if you even look at Warren Buffett, he's been getting out of a lot of things.
Getting a lot of cash right now. Yeah, that's for sure.
He's in a lot of cash. He's out of a lot of he's selling a lot of Bank of America, and so the interesting thing that, I know you wanted to talk a little bit about this as well, but the paths that are crossing right now are the election and the fact that interest rates were cut for the first time. Now, if you look at history, you'll see that recessions don't happen until after the first rate cut. Okay,
Yeah. Yeah.
so
Fair.
you've got these two paths crossing where you have the potential for a recession based upon histories showing that recessions after a rate cut, and then you have the election, which could go one way or the other. Now, my opinion is if it goes to the Trump side, we're going to have a deep recession, maybe even hyperinflation,
Interesting. Yeah.
only
Oh,
because he doesn't understand what a tariff is and how bad it would
yeah.
hurt our economy.
Yeah.
Um, he really doesn't have any, comprehensive policies or any plans. He's got concepts of plans. And so on the Republican side, it's really just the cult following. On the Democratic side, you know, Harris is going to want to boost the middle class. You know, that's what she's been talking about. And you can't boost the middle class overnight, after they've been decimated for so many years. It's going to take tax hikes. Okay. Maybe you roll back the Trump tax breaks for corporations because they've benefited. They've made billions and billions and billions, since 2016. So now maybe it's time for some little payback. We're not gonna go into a depression just because you raise taxes on corporations. I mean, we've raised taxes on corporations in the past, and we've been just fine. I mean, taxes were as high as 70% back in the 80s. We survived. So I think what's going to happen is if Trump wins, the market might go up initially on the anticipation that it will give more tax breaks to corporations. But at the end of the day, if he's talking about putting tariffs on China, which he doesn't understand is a tax on the American public, the market will probably do one of these. But if Harris wins, I think it will sell off um, because not just because she's a Democrat, but because she's going to want to take concrete steps to make sure that the middle class get back on their feet, concrete steps to make sure that people have an affordable place to live. And the problem with housing is you hear it all the time. There's a housing shortage. There's a housing shortage. That's not necessarily true. There's an affordable housing shortage. So there's tons of available units, just that people can't afford to live in them because they're too expensive.
Well, real
Now,
estate is heavily financialized too, right? So like it's
heavily,
yeah.
heavily financialized. And then you have, I mean, you talk about, in addition, say you buy a home in Florida, okay, you got to pay broker fees, you got to pay taxes, you got to pay insurance and
Well, now
maintenance.
the insurance is wild down there. It's gotten
Right,
really wild.
because I mean, you have hurricanes, two, three big hurricanes every year now. A lot of insurance companies have left Florida because they simply can't stay in business. You can take in premiums and then pay out claims and then raise premiums, but how often can you do that before people say, wait a minute,
Well, I
my
can't
flood
afford it.
insurance
Yeah.
premium is more than my mortgage, and
Yeah.
it's unsustainable.
Of course.
Um,
Yeah.
so, I think we have to get back to helping the middle class get back on their feet. Maybe, uh,
What about cutting the tax for middle class though? Because like yeah, you could hike
it's a,
taxes on corporations, but why don't you actually income taxes are pretty substantial, portion of the income for the federal government, of course. So
taxes are really not that bad for the majority of Americans that are making,
not compared to countries that I lived in. I lived in
yeah,
Norway and I live in Canada. So yeah, no,
yeah,
that is true.
right. So, yeah, by comparison, we don't pay a lot of taxes. You have child tax credit. You have a lot of acceptable expenses that the IRS accepts. So I don't think cutting taxes on the middle class, even though that sounds like a great throwaway line. I don't think that's really the issue. I think you have to stop a lot of corporate tax breaks for oil and gas, and you have to put an end to the loopholes that hedge funds benefit from, which is the carried interest. They never have to pay any taxes. They just borrow money against their own positions and live off that. So there are some creative taxes, a wealth tax. I don't know if a unrealized capital gains tax is going to pass. Probably not. Um, but
But wouldn't that
and
decimate the actual like we're talking not about the big corporations now. Now you're talking about general middle class businesses.
well, yes, there is a slice of small American businesses that may suffer from higher taxes, but that's only if they're making. The proposal is if you're making over nobody under nobody's that's making under $400,000 is going to have their taxes raised. So a lot of business owners, successful business owners, they make more than $400,000, and they'll have to pay more taxes. And
Yeah, it's not
maybe,
gonna. My question is, it's probably gonna end up like in Norway. Where in Norway, for example, like now we're just having both capital flight from the big corporations. They're all left Norway basically, and you also have the brain drain that are happening. We saw this in
right,
Europe with higher tax and a big government.
right,
So like both like Greece, Italy, Spain, Portugal are all been devastated by
yeah.
higher taxes as well. I'm a guy, I'm a fair guy, so like how
Mm-hmm.
I like it. What about everybody pay the same tax? Flat
Flat
tax.
tax.
Yeah,
Flat tax is a great idea.
yeah,
No, for sure.
yeah,
I mean, yeah, there's probably some ways to get around that as well. But if you had a flat tax and maybe no sales tax, I think that would create a lot of revenue
yeah.
for the government.
Yeah, because I
Um,
just see too much devastation in Norway. Like in Norway, we have 25% VAT. Healthcare used to be free, but the government couldn't afford it. So my
oh,
mom is now having heart issues, and she has paid thousands of dollars, to go and
wow.
test herself and everything.
I didn't know.
And so it used to be great, Norway. Everything was so fine for
Sure.
decades. And we're promoted as the greatest, most healthiest, happiest people in the world. It's not that
Yeah.
case anymore.
Yeah.
It's a part of that cycle of, like the government gets too big because they want to promote and give stuff to people, but then
Hmm.
at one point it just becomes too big and unsustainable. And
Right.
that's what I'm worried about will happen is like, oh, just raise taxes a little bit and a little bit and a little bit. I think if you had the equality under law, um, I think things would change quite drastically. And especially in your case as well, right? Like
Hmm.
if you actually had equality under law for everyone, because we don't have that. Like seriously, like how you
Yeah.
got treated, how
Yeah.
a lot of other people get treated in different systems. There's the guy with a lot of money. He can
Hmm.
just buy the most expensive lawyers, or they could
Right.
just sue you so much that you can't afford to fight back.
Yeah.
And so it's definitely not there. So there's a lot of big things that needs to be done. Like there's definitely something that needs to be done because the way they're going now, like I saw this in Norway. Norway went to do like and say and in the same thing, in Norway they incentivized interest rate write-off, but for the general public. So in Norway, we had 300% debt to GDP in the private sector.
Mm.
The household debt was 130, 140. So it's like it just like they incentivize financialized behavior, and this seems to be a cycle thing, a fundamental thing. Through I study monetary history, and it seems to be a fundamental cycle that happens over time when you have the financial system and everything starting to modernize into a system, and then suddenly people turn from productive behavior to financialized behavior, and
Right.
that's kind of where I see that we're at now. I don't know if like doing certain things with taxes or anything is really going to help us per se with that cycle. I think we're going to have to probably bite the bullet at one point and recognize that we need some serious reform for the general health for everyone.
Yeah. Well, definitely. I think that uh, the term cutting taxes, um, I'm sorry, the term raising taxes, everybody's feelers go up. Nobody wants to hear that. But if you raise taxes on corporations, you're not actually raising taxes on them. You're just rolling back the tax cuts that they got previously. So they're just going back. Okay, they got the tax cuts. They made billions and billions. They took the billions and billions. They bought back stock. They
Yeah.
inflated the stock market to where, okay, everybody's rich. Okay, now let's go back to where we can become sustainable, because right now we're not sustainable in terms of where we're going with the debt. I mean, the
No,
debt
no,
is
yeah.
just out of control, and
Mhm.
there's going to come a point where uh, hopefully not, but there might come a point where the interest payments, on the bonds are we're not taking in enough tax revenue to pay the interest payments on the bonds that we're issuing. So at some point, somebody's going to have to um, raise taxes or roll back
But
taxes.
but maybe that's only at that point. That's probably
Yeah,
my worry is it's only
yeah,
gonna happen at the point where there's the point of no return, where you have to do
yeah,
it.
right.
That's how
Yeah,
human behavior seems to be,
that's
like we
exactly
always
what it
yeah.
is. Yeah, you don't want to do it, but you only do it when you have to do it.
Yeah, yeah.
The other thing is kind of disturbing is that you hear a lot of these billionaires, Sam Altman and these other guys talking about universal basic income.
Hmm.
So essentially, what they're saying is, "Hey, middle class, just give up. You
Yeah,
know,
yeah.
we'll give you a couple $1,000s every year. You can pay your rent, and you can go ride your bike in the park. But other than that, you'll be okay. But in the meantime, we're just going to keep raking in as much as we possibly can by institutionalizing private sectors to the point where you might just have three or four big corporations and the government, and they're all running the world, and nobody else really matters.
Oh,
Um,
100%. That's
yeah,
exactly what you're gonna have in the current
and
structure.
and if that does happen, I mean that's the end of the American dream, isn't it?
Oh,
Because now you're
100%. That's
now you're
nothing to do
100%
with what
socialist.
America was made upon, no.
Yeah, exactly.
Yeah,
So so I'm kind of concerned about the billionaires and the ultra wealthy and their attitudes towards how do we fix what's going on.
yeah. Well,
Especially
my worry is that, it's not only the billionaires, but it's only also the political class. Like
yeah,
ladies like Nancy Pelosi. Well, this is both sides. That has nothing to do if you're Democrat
right,
or Republican, but they're,
yeah,
betting on stocks that they're regulating. Like
yeah.
it's
They're
insane.
all they're all doing it. They do it on
Yeah.
I mean Pelosi. I mean Paul Pelosi is the actual advisor. So every time
Yeah.
they talk Nancy, Paul's the
Yeah,
advisor.
yeah, of course, yeah.
He's been an advisor
We
for
had the
decades.
same thing in Norway too, by the way. Like our former
Yeah,
prime minister, her husband was the one doing the trades.
right,
Yeah.
exactly. So,
Sorry.
I don't know if they're allowed to use inside information or they are, and there's no consequence. But they are doing it on both sides of the aisle.
Oh, for
So,
sure.
But I know there's a bunch of proposals to to stop it because why should they profit from inside information from government, proposals? That shouldn't be right. I mean, that's
No, of
wrong.
course. Yeah,
You know,
that's insider information.
yeah, it's
That's
inside
illegal.
information. Should apply to everybody.
Yeah.
Yeah, no doubt.
Yeah.
So
No, so and
yeah, so
but what so okay, so you've seen kind of like there's going to be issues no matter what who gets in. Um
yeah,
there's going to be a lot of problems. I think the United States though doesn't have that private debt bubble like we're seeing in a lot of other countries. I don't know how much you watch macro in around the world, but it's a lot of private debt still. Here in Canada, we're just ridden with private like real estate, credit card debt, and so on.
right.
And we see that in a lot of other Western nations now too. I think so. Okay, so the United States is currently like the US dollar is, like still strong, like it's rising now because everybody else is piling in. It's
Hmm.
like a lack of US dollars basically because we're deflating, certain things. There's a lot of defaults going around that are kind of hidden. Here in Canada, it's very much hidden by the banks. They're trying to like underplay the substantiability of all the non-performing loans that they have and so on. And so you got that deflationary pressure. But what
Hmm.
ends up happening at the time is also everybody needs to find US dollars because the current system needs US dollars to function. And so you're seeing this in China right now. China is in a full-fledged, collapse. They have 60
Yeah,
million houses that they overbuilt. And so
right.
it's massive
Cities,
over, yeah,
entire cities,
yeah,
ghost cities.
yeah, yeah. And so they have an insane financial bubble. I think when I looked at them in 2018, I read a report from a think tank, and the level was 300 to 400% debt to GDP. Like with
Yeah,
the federal government didn't have much debt, but now,
right,
of course, they're doing the same damn thing right now as we speak, as the United States and other countries have done. They're doing quantitative easing, so they're doing the
right,
same stupid things, but they were in lack of US dollars. So what they need to do is then print a whole bunch of their own currency, but that could risk, seriously damaging completely the value of their own currencies.
well, they could devalue their own currency like they did
Yeah,
before, right?
yeah. Oh, yeah. No, they've done
That's
that. Hundreds of countries have done this before, and I
yeah,
think it's going to happen again. It's just that cycle, through history.
right,
We always end up, overextending ourselves when we allow ourselves to get into all that debt,
right,
and then we have to pay the piper at one point. And then
right,
usually, what government could do is it could just come in and say, like, "Okay, we're going to devalue. You're going to get for 100 of the old units, you're going to get one of the new ones." But now
yeah,
suddenly in a devaluation event, what could also happen, and it happened when they switched from the euro over to no, sorry, from the local currencies in Europe to the euro. They promised
hmm,
people, like, oh, don't worry, it's going to be one
right,
to one, and then suddenly it was
right,
3 to 1.
right.
Uh,
I remember that.
yeah, and they kind of destroy, and so that is a big thing with devaluation, but they have to do it at one point,
Yeah,
or risk a hyperinflation, which is
yeah,
the Trump way that probably could happen, right?
yeah.
And so,
It's a slippery slope.
oh yeah,
Once you start going down that road, there's really
yeah,
no turning back.
yeah,
You
no,
know,
for sure.
but so they just keep printing more and more money. The valuation keeps getting lower and lower. Your dollar buys less of things where the prices are going higher. And the other thing is that when you see the government, the Bureau of Labor Statistics comes out with their announcements, they're never accurate the first time around. There's
Oh,
always revisions, and for some
100%.
reason the revisions are always lower than
Hmm.
initially. So I think that helps pump the market higher, right?
I think most government numbers are not very accurate. The inflation
Right.
numbers are not accurate. I actually personally here in Canada, I went in and looked at the inflation numbers versus the cost. So there was a report out from the biggest bank, like our biggest JPMorgan is Royal Bank of Canada. They came
Right.
out with a report stating that the average cost of housing in Canada for people in certain cities was 80%, almost 75 to 80%.
Mm.
And that was like the whole portion of the total cost of housing, which is
Right.
that's also calculated in the CPI, where the CPI was 26%.
Yeah.
So like take that from 70, like, and then You had
Exactly.
26 officials from the government. And then you wonder why people are getting poorer
Right.
because their salaries are not keeping up because they're getting fake numbers.
Yep.
And so,
Exactly.
but it helps the government, of course,
Sure.
because they don't have to pay high pensions,
Sure.
to in order because they're gonna have to raise their pensions,
Yeah.
to because they promised that to the people. And so, if they could keep the numbers way lower than the
Right.
actual real numbers, well, it's beneficial, right? Then,
Yeah.
but it's devastating over the long run.
Yeah. Yeah. 100%. And the other issue that I know we're talking for a long time, but one thing that I did want to talk about is earnings estimates
Please, yeah,
because I've studied earnings estimates for a long, long time, and I could tell you that even before Regulation FD, fair disclosure. So Regulation FD came into effect in 2000, and Regulation FD said that corporations were not allowed to give analysts any information in between earnings announcements that could materially affect the price of the stock. So analysts really didn't have any connection to the corporations anymore. They weren't able to ask questions, about supply chain, about costs, about mergers or anything. So essentially, um, analysts, when you see analyst estimates, these days, they're really just guesses because they're not getting any guidance from the corporation. They're just doing their own channel checks and their own financial fundamental analysis to try to come up with some sort of estimate. But at the end of the day, the estimates are always undervalued in something I call under promise, over deliver. So corporations, they might say, okay, we think we're going to do 50 cents, but they know they're going to do 70 cents, but they say we're going to do 50 cents. So when they do 70%, oh, wow, surprise, but it's not really a surprise. It's an engineered surprise.
yeah,
And then when they beat the estimate, what happens to the stock? And the stock goes up, and this happened. Now, revenue is another story. Revenue, the top line, you can't really fudge. Take Tesla, for example. Tesla just came out with revenues. Okay, revenues were flat to slightly higher, below estimates, but the earnings were higher because the earnings can be engineered, and
yeah,
the stock went up what 10 or 15%, even though revenues haven't grown hardly at all.
yeah.
So so
Because
that's
the term revenue, is that similar to cash flow? Like kind of close to the same, similar?
no, just top line revenue,
Yeah,
gross sales.
yeah,
Yeah.
gotcha.
So the gross sales for Teslas were
Oh,
were
oh, sorry, yeah, of course, yeah,
yeah. So at the end of the day, I mean, you see this all the time, and I mean, we make money from it on my Excalibur trading platform. We know the corporations that under promise, over deliver, and we'll pick those out before their earnings announcements. Um, but a lot of things are just not adding up in terms of what happens to a stock after a certain event. Like
right.
for instance, take McDonald's. They had the E. coli outbreak, right? The stock the stock gapped lower, but then it moved up, and then it moved up again. And so why? And then Boeing strike.
Oh, of
Okay,
course, yeah.
stock should go lower. Oh, stock's going up. So yeah,
Yeah, as you
there's a lot
said,
of things going on.
fundamentals are straight out the window.
Yeah,
And here's an idea. I been interviewed twice. A friend of mine, his name is Chris Galazio. I don't know if you're familiar with Chris
I
at
think
all.
yeah, I think I've heard.
Yeah,
Yes,
he's on LinkedIn as well. But
yeah,
Chris is always saying, it's passive versus active. The
right.
passive portion is so substantial now that,
Yeah,
money is just getting funneled in and everybody's just buying,
yeah.
buying.
Yeah, I
Uh,
think I think folks they've been brainwashed to believe that you can't make money in the stock market anymore unless you just put it in there and forget it. Excuse me. But look, if you like to trade and you have fun and you like the stock market and you like the news and you like to predict stuff and you like to make a little bit of money with some risk management, that's kind of what I'm doing.
yeah, very
I'm
good.
not trying to turn anybody into a millionaire. We talk on my Telegram platform for, maybe a couple hours a day. So, it's just kind of something we're doing to all have kind of like it's a nice community of kind of like-minded
Yeah.
traders that we have. And we have great discussions and we bounce ideas off of each other. And we look at currently things that are going on in the market and what's going to happen to this stock or that stock. So, it's just something to kind of like really keep me occupied. It's
Yeah.
not a huge income generator for me, but
Well,
I
it's your
like it.
passion, right? Like it's fun, you
Right.
do what you like. That's very important.
It's my passion, and it's
Yeah.
not just my passion, but it's my experience that I really want to
Oh,
share with other
yeah.
people,
Yeah, yeah.
so I could pass it on to them. It definitely is my passion. I definitely want to pass on the education, and I definitely love answering questions and helping people, so they aren't dependent upon me to give them ideas, but kind of show them how they can do this on
Actually
their own
teach them
one day.
something. Yeah, yeah, that's wonderful. So how can people find your group and everything?
Sure.
Your is that Excalibur or is it I'm not sure. Yeah, so just
Okay.
let us know where everybody could find if they're interested in, trading, how they could, join the group and hang out
Sure.
and learn from, veteran.
Definitely. So we've already got about 130 members. Not all of them are paying members, but where I hold my equity research portion of it is on Patreon, patreon.com/equity. And equity is spelled EQWITTY, equity. So that's a play on words because I like to be kind of like to be witty with my responses and my posts to kind of create some buzz. And I put out morning posts uh, for the um, for the tier levels that have access to that portion of it. So I have three tiers. I have a basic tier, 29.95 a month, and that gets you access to the daily morning briefings. And then the gold tier is you get the basic, plus you get personalized um, uh, access to me where you can call me at any time and I'll help you out with trades that you might have seen in the morning post or things that you ask questions of. You might have your own ideas that you want a second opinion on. And then I have the Excalibur tier where everything happens on Telegram. And so once you sign up for the Excalibur tier on Patreon, I give you a link to the private Telegram group, and that's where we have all our interactions, and that's where you'll get the alerts for the buys and the sells.
Fantastic. So yeah, so please check that out, guys. And
Yes,
then of course you gotta buy the book, great insights and of course who is it now? I know this guy and is worth listening to. It's actually Lee Child,
yeah,
the guy that created Jack Reacher. So
yes,
I guess it's a bit of a thrill. I haven't read the whole book, but I know that there's very interesting and intriguing stories in there. So people
thank you.
should definitely get the book and enjoy it. And then, it's good to expose these big corporations because there's a lot of them out there around the world, and they're just, uh, they're kind of like at a destructive level right now. And, it's good to expose them for what they're doing and their criminal activities. So,
Right,
greatly to you because it's at, quite the financial hit, I'm pretty sure, what you
yeah,
had to go through. And so I really respect what you've done, and maybe I'll have you on in the future as well, Robert.
that'd be great. I'd love to
Yeah.
do it.
Okay, well, it was a pleasure having you on. So we'll end the interview right now.
Okay.
Um, okay, you have a good one and enjoy it, guys.